Hey, thanks for tuning into Harvesting Income. This video is actually for people who are new to investing or people who want to have one solution or basically one ETF that covers the entire market. Like there have been some questions and some requests on this to cover something like an ETF or a fund that covers the entire market, like invest in that ETF, and I'm done for the most part. So that's exactly what we are going to cover here. So I'm going to quickly switch over my screen to my slides. You can see that the name of the fund is SPYM, or some people call it SPYM. This is the State Street SPDR Portfolio S&P 500 ETF. So in simple terms, it's basically a fund that invests in the S&P 500 and S&P 500 stocks and all its constituents are replicated in this. So some of you may be familiar with this. If you're familiar with this, probably you can skip this video. However, for people who are new or want to understand the basics or want that one solution or one fund, to make their life easier, or you just invest in one ETF and set it and forget it, this is the right video. And I'll give you some basic information to get started. Basically, this fund is known as the State Street SPDR Portfolio S&P 500 ETF, started back in November 2025. Um, just to give you some background about the fund, it's a large multinational financial services company, which is known as the State Street. Uh, they are the ones who are bringing up this ETF. They launched in November 2025. And the size of the fund is like 151.7 billion. Like, I mean, it's hardly like 6 or 7 months since the launch of the fund. And they have been able to gather so much of assets. And that is because this fund company is known for a lot of index-based products, sectoral indices, and those sectoral indices based ETFs and other products. Plus, they also have like value ETF, growth ETF, small cap, large cap, all different types of broad indices, sectoral indices, plus also different parts of the market or country and so on. One of their popular ETF, their flagship ETF, which is very popular, is known as the SPY. uh, People who have been in the market for like last 2 or 3 decades, you are familiar with the SPY ETF, which is exactly similar to what I am talking about. So this is not a new concept at all, but this is something that is never going to go out of fashion. You know, this is something that every basic investor can get started with this kind of fund. And there are other popular funds, but the SPY was the most popular. And SPY-M is actually a smaller, version of the same fund, same design, like it has more or less the same features. So yeah, so that's the background about the company. They cater to all kinds of institutions, small investors, traders, etc. Because it's a very big fund and it's popular across the US and also internationally in other markets, and they're expanding globally. So let me go to the next area. Here is the main part that I want to focus on. Cheapest fund. Um, as the thumbnail was telling you, like this is the cheapest fund as of today in the market. Like the gross expense ratio is only 2 basis points. It's 0.02%, and you can see that on your screen. Um, Vanguard actually charges 0.03. SPY-M charges 0.0945, and yeah, you can see that SPY-M is the cheapest, like 0.02. That's the lowest fees ever you can get. So their own fund, which is SPY ETF, is at you know 9.45 basis points. So they're trying to actually become the low cost fund operator, and yeah, they're trying to reach all kinds of investors, big, small, medium size, and so on. So obviously this space is getting really really hot. It was just the vanguards and all these bigger firms, iShares, BlackRock, and so on. They were dominating the market. Now, State Street is also one of the dominant players, and in the S&P 500, they have taken the lead now. Yeah, it's interesting. Like it's interesting for investors because you get a lower cost and you're paying less for your dollar. Like, so for $100, you're paying like 2 cents. So for about if you're investing about $10,000, you're paying just $2, in terms of fees per year. So that's a great deal, great steal, I would say, for retail investors, especially because the costs add up over a period of time if you invest for 10 years, 20 years, and so on. Okay, so that's about the fees. But fee is not the only thing. There's also other aspects. If you look at the returns and portfolio is very simple. They replicate the S&P 500 index. So if you're not familiar, S&P 500 is the index which covers about 80% of the US market approximately. All different companies, all different sectors. It is well diversified. So even if you just invest in any ETF that tracks the S&P 500, you are getting one ticket or one access to all the 500 companies in one shot. Like you don't have to pick and choose different sectors, different companies, do the research, track the financials, track the quarterly results, listen to what the management is seeing, check out the latest news and so on. It's very complicated. So simple solution is just go for the index ETF. And what's happening here is the price return. Like I looked at the last 1 year performance. So this is all the 1 year performance, and I've looked at the prices on Yahoo Finance. The price return is about 25%, 25.4 to be precise. And if you look at the dividend yield, it's close to 1%. So the total return comes to 26.4. It's pretty good, very good, because obviously the markets have been on a bull run. So prices have been moving up. So obviously you'll see that on your screen in the returns numbers. Uh, the yield that I calculated is based on the last 4 quarters dividends. So for people who are looking at regular income or yields every month and so on, this is not the fund for you. You can look at other funds or covered call ETFs that I have discussed in previous videos. But this is for people who want to just set it and forget it. And every quarter you are receiving the dividends and your portfolio is gradually growing over a period of time. Probably 5 years later or in future, you may look into the portfolio just to make sure everything is okay. So if you have that long-term horizon and you're not bothered by the day-to-day, ups and downs, and you don't want to spend time picking stocks, picking sectors, picking funds, doing a lot of research on that and trying to buy, sell, balance this, balance that. This would be a great solution. So it saves a lot of time, a lot of efforts, and the also the discipline or the consistency of investments can be maintained because you just continue with your investment plan regardless of how the markets are going, and you just keep focused on just that one fund. So that's a perfect solution for couch potato investors or completely passive investors. So you got my message. That's the solution, one stop solution for someone who wants a one ticket solution to access the S&P 500 index. Okay, so that's the simple summary of the fund, but I want to just share a few takeaways why someone should consider SPYM when you have the Vanguard and other options. Okay, one reason is the low cost. Okay, I mentioned that in the fourth point, 0.02% expense ratio. That's pretty obvious. But also remember that SPY had a flagship fund called the SPY, and that was a super hit success for many years or even decades. They had about 758 billion assets under management. So they have actually launched the SPYM, which is a smaller version of the same fund. Um, so there is a kind of track record success that you've seen, and fund managers have been doing well. In this case, it's more automated because it's not the fund manager picking the stocks, it's following the index. So it's a proven passive index duplication model, and it eliminates all the efforts related to, stock picking and all the risks that are associated with picking stocks, doing the research, and even if after you do all the research, things can go, you know, in the other direction, like what you predicted and what you estimated may not work out. So that's thing that saves a lot of time and effort for the retail investor. And this provides one ticket access to S&P 500 portfolio, like 80% of the market. and the price or ticket size is around $88, $89, depending on when you're seeing the price. It would be different when you're, checking the price from the time this video was created. But it is pretty accessible. If you look at the other funds like SPY and all that, it's probably $600 or higher, you know. So for retail investors, if you want to buy in a lower ticket priced product, it's easier to, buy in smaller quantities, rebalance the portfolio and so on. And I don't recommend the fractional shares. Like I myself don't like to do like buying, a quarter of a share or one third of a share. It's not going to work like that. So this smaller ticket size, makes life easier for the retail investor to rebalance and manage the portfolio. Last but not the least, the fund actually has a decent rating, like 4-star rating from Morningstar as of May 31st. So that's another point that adds credibility to the fund. So in terms of the low cost, in terms of the track record, in terms of all these, like I find this a very great option for conservative investors or people starting out just now and they want to get started in investing without the complex research and all these efforts involved. It's a great option. I hope you like this video, and if you liked what you're watching, please feel free to subscribe to the channel and share it with your family and friends. Have a great day. Happy investing.